But talk us through
Absolutely.
the key drivers. Profit before tax up 23%, gross earnings up 16%, and net interest income also up 10%. Talk us through the numbers.
Okay, thank you. H1 2018 has been a good half year for us. We've seen positive results from our efficiency drive. We've been working on efficiency, having rebuilt the bank's engine. We're now, pumping it for more efficiency. So H1 actually proves that the strategy is working. In H1, we saw more than a 300% increase in our revenues from digital channels. We recorded robust earnings on the treasury side, trade fixed income securities. We recovered NPLs that contributed to the top line as well. We saw something like a 10% reduction in cost of funds, which improved our net interest margins. We launched our robotics process automation project. We're very excited about that. So we're doing a lot of stuff to increase efficiency, reduce our cost to serve the customer, make the customer so happy with us that they keep coming back. We're now opening 120,000 new accounts every month.
Wow.
Yes, and I was just looking, consumer deposits are up 3% to 826.7 billion naira, and that, you say, reflects a 66% increase in foreign currency deposits. Can you just talk us through how that happened, if you did anything to really drive that growth?
Again, for us, we believe that once a customer experiences the new Union Bank, they will come back. And that's why we took a time before we relaunched the brand. And what we're seeing now is increased customer affirmation of what we're doing. There's increased customer acceptance of the Union Bank brand and the Union Bank proposition.
And I'm just very curious, very quickly, how are you measuring this customer affirmation? Is it through social media or?
We have a lot of customer engagement forum. Some are formal, some are informal. We're also part of the KPMG customer service survey. And all these things keep reaffirming that we're onto a good thing, that the strategy is working.
Okay, I'm just taking a look at your operating expenses. That's up 21%, and you put here that it's largely due to a 25% increase in regulatory levies from the NDIC and AMCON. Tell us about that.
Okay, well, there's a cost for growth in the banking sector. When your deposit book grows, your NDIC premium the following year grows. Okay. If you remember, in Nigeria last year, we grew our deposit book by 26%. Okay. So if you do a parallel, you would expect a 26% increase in NDIC premium. Likewise, the AMCON levy is a levy which every bank in Nigeria pays. Okay. It's a percentage of your balance sheet. So when your balance sheet grows, you pay more. Okay. So when you combine the AMCON levy and the NDIC premium for us, there's a 25% increase on those two lines. That's about, you're talking an 8 billion naira expense. Okay. On those two
Something
lines.
I also noticed was the fact that your retained earnings for the first time in a long time was positive. And is this something that you can sustain going forward?
No, that's absolutely exciting for us. We last year, we concluded a court-sanctioned process for restructuring our capital. Really, all we did was we were able to utilize the hugely positive balance on share premium, to address the negative retained earnings. We went through a court-ordered process. Oh. Okay. So we virtually eliminated all of the negative last year. This year, what we've seen is accretion of earnings. So we're firmly in positive territory now.
Okay, so I went through your earnings and they're all pretty strong. The only bit that goes down is gross loans, and it's down 9%. Is there any reason for the reduction?
Yes, that's because in Q1, and I think I spoke about that when I was here for Q1, we took a decision to clean up the loan book. So we identified legacy loans, which had been fully provisioned over the years, and we took them off the balance sheet. That was a deliberate action. So we took about 64 billion naira of loans off the book, and that accounts for the dip. Okay,
what about the business environment? First half of the year, how would you describe how the business environment has treated the banking industry? We just had the CBN talk about, the MPC meeting this week, and you know, looking at some of the indices, they're not too positive, especially if you look at the outlook for the economy with the forthcoming 2019 elections. But what are your thoughts on how you've been able to weather those storms, those headwinds this year?
Well, the environment has remained challenging, but the metrics that indicate whether Nigeria's economy is improving or worsening are all positive. You know, inflation trending down, external reserves very healthy, oil price up, and all that. So all that was a fact. But there are certain issues that make the business of banking quite challenging, like the cash reserve requirement. I'm not going to go into that in detail. You must know the story there. But the reality is, for a bank like Union Bank, we're not doing anything complicated. What we're trying to do is to be a simpler, smarter bank. So we take the simple things that banks do, and we do them as best as anyone could do them, and do that on a consistent basis. And those simple things address the basic needs of about 200 million Nigerians who, whether or not there's a challenging environment, must eat, must be fed, must be housed. So what we aim to do is to find ourselves in the middle of all these basic transactions. People buy, they sell, they borrow, they lend, you know,
General commerce.
Yes, just simple general commerce.